Hello everyone, welcome to my channel. This is Easy Accounting channel. Today we are studying IFRS 12, disclosure of interest in other entity. The objective: IFRS 12 requires the disclosure of information that enable users of financial statements to evaluate the nature, the risk, the interest, the effect of those interests in the financial statements, in the financial position, in the financial performance, and in the cash flow. IFRS 12 required, together with other IFRS, do not meet the objective. An entity is required to disclose whatever additional information is necessary to meet the objective. So, entity that has an interest in any of the following should apply IFRS 12. The subsidiaries, the joint arrangements, the associates, and unconsolidated structure. So, our interest held for sale and disclosure in accordance with IFRS 5. IFRS 12 does not apply to certain employee benefit plan. IAS 27 separate financial statement applies certain interest in joint held by an entity that does not share in joint control. An investment entity that prepares financial statements in which all of its subsidiaries are measured at fair value through the profit and loss account. So, significant judgment and assumption. An entity discloses information about significant judgment and assumption it has made in determining the control another entity, that it has joint control of an arrangement, and the type of joint arrangement when the arrangement has been structured through a separate vehicle. Interest in subsidiary. An entity shall disclose information that enables users of its financial statement to understand the composition of the group, understand the interest that non-controlling interests have in the group, and evaluate the nature and extent of significant restriction on its ability to access or use the assets and the liability of the group, and also evaluate the nature and changes, the risk associated with interest in consolidated structures, and evaluate the consequences of changes in its ownership interest in its subsidiary. So, interest in unconsolidated structure. In accordance with IFRS 10, consolidated financial statements, an entity is required to apply the exception to consolidation and instead account for its investments in a subsidiary at fair value through the profit and loss account. So, where an entity is an investment, IFRS 12 require additional disclosure. Number one, the fact the entity is an investment entity. 2, information about significant judgments, assumption it has made in determining that it is an investment entity. Then details of subsidiary that have not been consolidated, and also detail of the relationship and certain transaction between the investment entity and the subsidiary, and information where an entity becomes or ceases to be an investment entity. Interest in joint arrangement and associates. So an entity shall disclose information that enable users of financial statement to evaluate the nature, the extent, and financial effects of its interest in joint arrangements, and also the nature and changes in the risk associated with its interest. So interest in unconsolidated structure. So an entity shall disclose information that enable users of its financial statement to understand the nature, the extent of its interest in unconsolidated structure entity, and also evaluate the nature and changes, the risk associated with interest in unconsolidated structure entity. So we can say that IFRS 12 is applicable to annual reporting period beginning or after 1st January 2010. So IFRS 12 is applied entity are encouraged to voluntarily provide the information required by IFRS 12 prior to its adoption. So providing some of this disclosure require IFRS 12 does not compel an entity to comply with all of the requirements. So IFRS 10, consolidated financial statement, IFRS 11, joint arrangement, IAS 27, separate financial statement, and IAS 28, investment in associates and joint venture. Thank you for coming to my channel. Please subscribe to my channel and I will see you in my next video. Bye.